Okay, guys, have you ever wondered what stranded astronauts and your portfolio have in common? Well, they could both be lost in space. Today, I'm going to jump on to some really great stocks that are setting up in 2024, but may lead to a strong 2025 for you and your money. So if you're ready to go, let's go ahead and launch off and go rescue your portfolio. So remember what's going on this week. We had SpaceX launch a rescue to grab stranded astronauts. But here on Earth, stocks like ARM and NVDA, maybe they're on a rescue mission for your portfolio. So let's go ahead and jump right directly over into taking a look at ARM. Why should we even be interested in ARM? Well, ARM's architecture is the foundation of smartphones. But now it's breaking through not only to smartphones, but also to data centers, PCs, and other devices. And, as the world demands higher, energy efficient solutions, ARM is in a position to take advantage of this. Think of ARM as being like the silent engine driving the tech shift, just like how the engine of your car is unseen, but you can't go anywhere without it. So what is ARM doing? Well, our ARM is just an IPO from, a little bit over a year old. Go over and look at the monthly chart, and you can see it's been out there for about a year. It's in the same category as NVIDIA in the chip sector. And check it out. It's above all its moving averages. And I'll be looking to play this coming back down across either the 8-day moving average that you see right here, 8-day moving average here, or down here at the 8-week moving average, which corresponds to approximately the 50-day moving average. And so that's where I'll be looking at jumping on ARM, ARM. It has weekly options, and it really is a nice trading stock. Its growth potential going forward is really significant as it increases its licensing deals and which signals explosive potential again, finishing out 2024 and then going into 2025. Now, the next stock I'm going to jump onto is a cousin, they're in the same industry group. We've seen it many times, but I have a wrinkle that you're going to want to pay attention to. And the wrinkle is on this and the next 3 stocks is going to blow your mind. And my 4th stock today, I was shocked that I'm basically going to be trading this, but it could be a powerhouse in a big way. It's an old name, but it has a lot of power under the hood. So what's the next stock we're going to be taking a look at? It is our buddy, NVIDIA. Now, NVIDIA, of course, has, it is also in the chip sector. There we go. And the big thing about NVIDIA is it's just GPUs and its background of AI. It's almost synonymous with AI. Picture NVIDIA as a superconductor behind supercomputer behind supercomputers. It's the secret power making AI systems smarter, faster, and more adaptable. It's been used in the gaming industry, and NVIDIA isn't just part of the game. It's the ultimate cheat code. I like this. It's the ultimate cheat code for unlocking unrealistic experiences for gamers worldwide. And it's expanding into the automotive area and automotive section, and knock, 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 we may be seeing an automotive stock here, most skosh. And so what are we looking for with NVIDIA? NVIDIA is, blow this up, there we go. As you can see, NVIDIA went on a tear starting back in the end of 2022, running up into, currently. We're currently putting in this really nice little pennant. And if we break out the top side, watch for it to continue to process up past 177 and higher. All-time high on NVIDIA is up here at 140.76. But as you can see, NVIDIA is respecting this downtrend line, the top of the pennant there. and we're getting a pullback right now. Where's it going to pull back to? Will it be the 50? Will it be the bottom of the Keltner? Or will it be all the way back to the bottom of the pennant and then bounce from there? Let's keep an eye on this. Remember that the markets tend to maintain still a little bit of weakness through about the midsection of October. And so, but I'm looking at NVIDIA, and basically all the four stocks that we're looking at today. A person can't really afford not to be at least a little, have a little bit of NVIDIA. And so what I'm looking for this is continue to pull back, watch the momentum, follow the momentum. If we break down, I'll get a deeper pullback on the momentum here, the TSI. However, we may just be getting what's called a bullish squeeze on the momentum where it squeezes together before it launches higher. So I'll watch that again at the either the 8 or the 50-day moving average for a great bounce to the upside on NVIDIA. So looking at a range of 116.53 approximately on the price action. But now the good news is, let's say you don't want to spend $121 for NVIDIA, and you have a wonderful option. I've been trading this particular entity for several months now, and I absolutely find it fantastic. And that is, as you'll see, and I want to give a idea here what this can do. I'm going to measure here from this low here back in here up to that high there. NVIDIA ran up about 25, 26%. Excellent run up over an 18-day period. Well, I love NVDL. That is a 2-time leveraged ETF of NVIDIA. And people have said, well, you got to watch out for those leveraged ETFs. They'll rip your face off and all that kind of stuff. And the fact of the matter is if you will, just follow great technical analysis. And if you have if you're trading a mechanical system, just apply the mechanical rules to trading this. Because looking at that 25% move that NVIDIA went on, how well did, grab that right there, and that's up 57%, 57%. So you can see it's almost a little bit above the 2-time leverage aspect. But again, I'm playing it the same way. We get a breakout, look for a run all the way back up to 86. And so let's say we get a breakout here from that high there up to the past highs is about 29%. However, what I'd be looking for is to the extension of from this high to this low and see how high that takes us. To do that, I'll just grab my Fibonacci real quick, throw a real quick Fibonacci to give me an idea of where there we go. Now I'll just pull this down a little bit. Actually, I'll go over here to the weekly chart. And if I get the breakout from where I started the Fibonacci, and we get the breakout here, I could run all the way up to 96. That's the 1272. And if I got a full extension of 100% move from where I am right now, that 100% move would be that move on the fibs would be approximately 130%. Now, am I going to capture all that? No. Is it going to go up there in one fell swoop? No. But that's the potential that this NVDL has. So, hey guys, if you're finding this breakdown that we provide every week, if you find that it's hitting the spot, just subscribe, and you'll be notified when I put out any new top stock and ETF picks. And so let's go ahead and jump into the next stock. And this one continues to be one of my favorite entities. It is, it's a really amazing stock, has an amazing, I'm not in love with the guy, but an amazing CEO. And it looks like it is finally maybe out of the woods and starting to climb. Now, we are still working out of a larger triangle type position. You can see large here. We break out the top side of that. So watch out. We're going back to 385. This is on Tesla, TSLA. We jump out the top side of this, we're probably going back up to this 370 level. From where it is currently, this is on the, took a monthly chart. Let's go back over here to the, let's do the monthly. So how many months did it take us to get from that high down to where we are today? It took us approximately, that took us 884 days. So what is that? That's almost about, yeah, a little bit over 2+ years to get to there. And so what happens if it takes us another 2 years to get back up to that level there? You know, that's okay, because I can just grab this, pull it back up to there. So that's about a 62% move or 55% move on Tesla. Now, am I going to buy Tesla right where it's at right now? The answer to that is no. What I'll do is I'll wait for a pullback into the 8-day moving average, or if it fails at the 8-day moving average, look for it to fall all the way down to the 8-week moving average. And what I love, and one of the reasons why I put the 8-week moving average on my charts and have them replicated over here on the daily chart, is look how nicely it corresponds with both well, here's the 50-day, really darn close. And currently I don't have the 34-day moving average on here, but it relates really well to that 50-day moving average. And so I can put in alerts down there. It lets me know what's going to happen. So I can see Tesla either doing one or two things. We get a big surge and break out, and then this downtrend line reverses polarity and becomes a support, and we'll look for the moving up to at least 271, which would be nice. I would like to see, as I said, a pullback into the 8-day moving average, or just a pause here for the 8-day moving average to catch up with it. So that's what we've got going on Tesla. But as I said, Tesla also, and you guys need to stick around, because the last stock is going to blow your minds. It really is. Tesla also has a leveraged 2x ETF, and it also has weekly options, which again makes it a big bonus to be able to trade. And I trade it the same darn way. But rather than paying $260 to get into a position on Tesla, I can jump on shares of TSLL and for $13.71. Now, is it in a buy position right now? No, it is not. My momentum is getting a little bit overextended. I would like to see a nice little uniform pullback, nice little flag like it did over, let me blow this up and show it to you, like it did over here. That's a really nice, right in here, did this nice little flag down to the uptrend line, and then bingo, bango, away it went. What are some of the other strategies you can use with this particular entity? You can, another thing I like to do is do either poor man covered calls. If you don't know what that poor man covered call is, drop me a note down in the chat. Well, in the chat, and I'll let you know what a poor man covered call, or just buy the entity itself and sell covered calls against it, just a regular straight covered call, and it pays out basically about 3 to 5% per week if you time your entry on the covered call appropriately. So again, I like TSLL, and it's right up against it. And we'll see if we break out. But like I said, it wouldn't surprise me to see a rollover and a pullback, and could go all the way back down to the 8-week moving average, which is sitting about $10.90 to $11. Now the surprise, drum roll, please. The surprise on the next stock is this stock has run up against it with the Department of Justice. The Department of Justice is going after these guys for supposed antitrust type unfair practices with internet advertising. Now, of course, I'm talking about the big Goog or Alphabet. Is it Alphabet now? Yeah. No, it's not Alphabet. Yeah, it is Alphabet. So, but we're going to call it Google because it's been Google to me for a long time. But Google or Alphabet, which do you prefer calling it? You still call it Alphabet or Google, or are you one of those new guys and call it Alphabet? So what tends to happen after DOJ comes out, does their investigation, subpoenas them, does all their it oftentimes turns out to be a big nothing burger. So nothing burger. Blech. So what does that mean to you and me? Well, what that means to you and me is that we want to be ready, because what could happen is Google could be shaping up very nicely, because this investigation started back in 2023. And if it wraps up and basically Google's able to thumb their nose, because the government has to be nice to Google, because if they're not nice to Google, who in the world is going to censor all the stuff on, YouTube and all that type of stuff. I didn't say that. Well, maybe I'll oh gosh, I hope I'll get ripped on that. But, because the government's going to be nice to Google. I mean, you just go figure. I'm saying that partly tongue in cheek, guys. But think of Google as a skyscraper of tech world built on a strong foundation with an expanding floor, which it is. It's getting into AI. It's getting into a lot of, cloud computing. Google is a place where you have to be. If Google is a buy right here or off the 8-day moving average, and it rolls back up and hits the past high, because ever since it was, got itself in trouble or suspected, it's about a 16% move. So you're going, that's no big deal, Dennis. That's not very good. Aha. Well, that's where knowing that Google also has a leveraged ETF called GGLL. The only downside I see about GGLL is that it does not have weekly options, but it does have monthly options. But it's at $36.40. Now that's quite a significant savings. And a little tip here, when you are trading the leverage ETFs, notice how this leverage ETF is below the 50-day moving average. Go over here to Google. Is Google below the 50-day moving average? The answer to that is no, it's breaking out above it. And so I always use my non-leveraged ETF, non-leveraged stocks or ETFs to do my technical analysis, because it's a much more pure technical analysis. So if we may get a little bit of a pullback down to the bottom of the Keltner channel, that would be okay. So I'll be watching this. The TSI market on the daily chart is kind of approaching the upper level, but can still go higher. We do need to break out above those moving averages there. But my weekly, check this out, my weekly momentum on the TSI has crossed to the upside. Now it can zig back down as it bases and then break out, but this is very positive for GGLL. And the other thing that I really like about this is that with GGLL, if it goes on the same run and runs back up to the past high, what kind of a move is that? Well, just grab that, approximately where Friday's close was. Look at that. That's 42%. 42%. Which, and I think, what was, go back and check Google really quick. Google was, same move. There we go. It was about 15%. So you can see, since there is a bullish slant to the leverage ETF or to the price action, it's actually returning a little bit more than the two times leverage ETF, because as we said, so that was 15, and what are we looking at on this? Grab it. Yeah, about 15. Yeah, about 40%, 40 to 41%. So again, these leverage ETFs, I hope you can use those to, plan around what you're doing. Sometimes what I'll do is I'll buy a few shares of the entity itself, okay, the non-leveraged entity, and then to offset that, let's say I have $10,000 invest, I'll put $5,000 in one section and $5,000 in the leveraged ETF, and it's kind of interesting to watch that. However, if you trade in that mechanical system, my stops are in place, so I'm not going to get my face ripped off when this, if it in fact turns around and goes the wrong way. Oh gosh. And so, hey guys, if you're ready to take your trading to the next level and find the highest probability trades and then check out the video that'll pop up over my head, over which way? Over on that side? No, over on that side. Over there. It'll pop up there. And I think you'll find it a great way to put into practice to put more money in your pocket. Aloha. God bless.